Okay, good afternoon and welcome, guys. This is Dollars for Lunch. It is going to be a very special edition of the show. I'm playing around with something new and it got me a little bit distracted, and I will be showing you guys this coming up very shortly. Now, we've been speaking about it for a while, but before we jump into it, I just want to know you guys' opinion. What's your opinion of MetaTrader? You know, what's your experience on it thus far? Yeah, for those of you who are starting out and using MetaTrader for the very first time, let me know what's your thoughts about the platform as a whole. Just a quick shout out to our massive community. I can see there Kliso saying, I'm new here, guys. Hope everyone is good. Welcome, Kliso. Welcome. I can see just from our community, we have Waylon, Joseph, Nobile, Colin, Gilbert, Taboho, Paul Alvink, I think it's Alvin, Peter, Patio, Tumelo, Twaki, Tyler, Mark Hooper, Dan, Sean, Chris H, Fabian, Freeman, John, Sipo, Claude, Andrew, Neil, Colin. Welcome, guys. We are about to jump into it and have an amazing time. Right, so Colin saying he prefers MT5 to MT4. Well, guys, listen, I'm about to show you guys something. It's brand new, it's fresh, nobody's ever seen it before, and I'm about to show you the future of trading. But I don't think you guys are ready. I'm seeing this chat is a little bit calm. Listen, last night's chat in our live stream, in terms of those stock earning reports, was epic. Most of the times I was spending more time laughing at the chat and having a great time with you guys in the live chat. So let's keep that energy, let's keep pushing. But I want to just see, I want to see those likes. I'm only seeing a few likes on the broadcast. We get those likes up over, let's say 70-80 likes. It will show you what is the future of trading. Thanks, South Africa, saying my first time here too. What's up, everyone? Guys, welcome. We're about to have an amazing time this afternoon. We're going to have it's a very amazing opportunity to be alive and to be a trader. We're going to see interest rate announcements. We're going to see some fundamental data. We're going to see a lot of info across the board. Okay, there we go. So we are having some bug on the stream. Let's see here. Okay, there we go. We should be back due to load shedding, and I had some meetings. I moved over to Wi-Fi, so somehow that stream was holding up over my phone's connection, right? Which is mind-blowing. So anyway, that's my apologies. I got very excited about this new tech and what I've been playing around with. So network should be better now. Just confirm for me, you guys are seeing me now loud and clear. Okay, guys, so the future is here in terms of trading. Let's just see here. Everyone's having a chopping stream. So it should be sorted out now. Not be available iPhone, it's stressing. Well, Joseph, we have a solution, right? So I want to see some thumbs up if you guys want to see the future, and I will be showing you guys some mind-blowing stuff. It is super exciting. I'll give you guys a hint, and that's going to essentially just be a little bit of a side view over there. So what you see right here, right, that is going to be the future of trading. But again, once we see the stream's likes go over a certain value, I will be showing you this because you're the first people in the world to see what is going to be the future of how we're going to be trading and how we're going to be moving things into the next dimension. Just look at how buttery smooth that is. Oh, that's just something else, right? It makes MetaTrader look non-existent, non-needed, and yeah, we're about to get into it. That's what it's all about. So this afternoon we got a ton of data, a ton of information. I'm going to count those likes, and then we'll decide whether I show you this or we package it for later tonight, because we do have a very intense stream this evening as we trade those Apple and Amazon stock release reports. But for this afternoon, we've got a lot on our plates that we need to deal with. So we're going to start off with the news. We're going to see how that goes. Maybe I should just give you a sneak peek. Ooh, there we go. The Brettster, welcome and thank you for jumping in and subscribing. You are part of the family, right? Let's just quickly have a look here. I think I'm going to show you guys. I think it's worthwhile showing you. saying Globex is the future without a doubt. Tamila saying, I can't hear nothing from Dane's side. You need to lift your volume. Oh, goodness. Full of jokes. Okay, guys, we're about to have a ton of fun. This is going to get crazy. This is going to get interesting. And I want you guys to see this, right? I wonder if I can show it. Let's have a look. Okay. So have a look at this, right? In most cases, when you're trading, you got to log into these different accounts. You got to log into different MetaTraders. It's a buggy thing and it doesn't work. Have a look at this, right? Again, you're some of the first people in the world testing it. We're still fixing a lot of bugs. We're still fixing a bunch of things. So you can log in with the same username you use to log in the Globex 360 clients area. Now wait, it's going to get, hold on a second, right? So watch this and follow this, right? So you use your login that you use on your Globex 360 client area. And have a look at this. All of your accounts are listed, right? So all of your MT4 trading accounts are listed. And let's say I want to trade with this one. I'll click on that one. It'll give me a passcode. Do I want to add and lock that account just in case there's multiple people on my PC? Yes or no? And if I choose no, have a look at this right here. Right, this is the future of trading and you're seeing it right in front of your eyes, right? Now, the most impressive thing and the things we've really been pushing for what traders want to see is obviously over and above the amazing, insane amounts of tools and what you can do, right, from a trading perspective. It's nuts. You can have your crosshairs, you can have markers, you can have, so many different types of instruments, price and time tracking the top and bottom. I'm going to just rescale this window just so you can see the full bottom of this chart, right? Now have a look at this. So Euro USD, I want to create a sell, right? I can literally choose my lot sizes there. My stop loss, I can choose it as either being pips or price or balance of my account or cash, bar high, bar low. Let's say I want to say pips. I can literally input there the pip amount, right? So let's say 100 pips. It automatically adjusts my stop loss and says, based on that trade, right, I'm going to be risking at 100 pips, $50. So it's doing the risk management right there. And it's saying that's negative 0.1% of my total account. TP, right? I can do some pips as well. Let's say I've got a 200 TP. I can see that take profit will be 0.3% of my account. And if I want to do a trailing stop, like how great is this, right? I want to have a 50 pip trailing stop, right? I can literally have all that there. I can put it in this here comment. This is a dollars for lunch trade. As an example, I can say that this forms part of my strategy number 2. Let's say it's scalping. And I can go ahead and pop that sell into the markets. And then my trade is live, right? On the top left-hand corner, it shows my running profit and loss. It shows all the information that I need, the indicators, the tools, the amazing assets within the platform. Is you've got to spend hours on MetaTrader to get all of your advanced tools working. This has got everything plugged in by default, right? And when your trades are running, it's so easy to manage. It's so easy to deal with and make quick work of a very otherwise complex trade setup, right? You can drag the stop loss, drag your TP like you normally would. But the tools and the features are absolutely amazing in terms of what you can do. You can draw, you can put icons, you can put stickers, you can put magnets, it is absolutely amazing, right? You can do presets, you can set price alerts to let you know whether it be by email or within notifications within the platform itself. This is going to be the future of trading, guys. There is zero doubt about that. You can go to full screen into a focused mode. You can move around between your assets and your instruments. It is just something else on another level, right? Just really easy, great to manage. You can list by your open positions, by your closed positions. And the amazing thing is when you look at some of these trades, right, it will give you your account history, a trading journal within the platform. Meaning you want to go ahead and go through your history and figure out what the trades were, what the comment was that you made, or whatever the case may be. It's doing those summaries right here within your setup, right? So insights, what are you trading the most, best, worst times, analysis of your whole account, your balance versus deposits, statements of all of your trades busy being made directly at your fingertips, right? This is the future, right? And I'm spending a little bit more time on this than what I probably should, but again, it's just a sneak peek of what is coming extremely, extremely soon. my Globex 360 is without a doubt taking over, leaving everybody else in the dust. Everyone else is sitting on MT4, sitting in a weird signals group. We're taking it to a whole new level. Let's just see, my comments aren't updating. Let's see what's busy happening. Guys, it is absolutely insane. Can I balloon above the price? You pull the price up? Yes, you can. You can. Yeah, journaling is in there. The types of tools that you have from analysis perspective by default are absolutely mind-blowing, right? So the tools available from a trade specific, instrument specific, Fibonacci, you name it. There's so many things that I'm playing around with here when I'm like, wow, this is the type of things that I wanted to see all along, right? That's what it is all about. Okay, so we are going to jump into it. We're going to start to look at the markets and where we need to be, what sort of trades we need to be taking as we jump in this afternoon. So we're going to start off on some of the news. Now remember, because we have an extended view session, right? Go ahead and smash that like button. Go ahead and make sure you are subscribed to the channel. And I want to see those likes smash up, right? We're sitting on well over 100 people watching us live right now. If you find value in this, go ahead and smash that like and subscribe button. What I'm going to be doing, right, is I'm going to be asking a key few amongst of you, right? So those who are MBTs, those who've been with us in our live sessions on a daily basis, we're going to be releasing to those of you, we're going to have it a limited group. We're going to have about 50 clients who are going to be the first to gain access and be able to test. Give us your feedback, your experience, and we're going to have a very specific training session on this new platform so you get your hands on it before anybody else in the world right now. It is mind-blowing. It is everything that I wanted to see and so much more from a platform perspective. So remember, if you've got your Globex 360 live account and you are in our shows and it's more than $100, we will be inviting you to come and test, right? So you want to stay tuned, stick around for this evening because we will go through that process and maybe you get your opportunity to come and test with us, right? Fabian saying, I smell a new meme. Absolutely. Tyler Peterson, great stuff. Everybody's got their eyes wide open, right? So obviously make sure you like and smash that like button. All right, so we are going to jump into the world because obviously there's a ton busy happening. So we're going to start off on the local front this afternoon because obviously there's quite a bit of data we want to cover and things that we want to jump into. We're just going to jump right into news. So it does definitely seem that that terror attack that we were speaking about earlier on is definitely legitimate. It's posted in News 24 and essentially is, you know, targeting Santon City. So please, just for caution's sake, if you are in or around Santon, please try and avoid populated areas this weekend. At the moment, it seems credible. The threat seems real. And again, in these particular cases, always safer. It's rather safe, better than sorry, right? So we want to pay attention. We want to stick to that. In terms of the pound, we have looked into the pound and what's busy happening. And there is going to be a lot of turmoil as we lead into the euro interest rate decision, right? ECB is everything that is going to be pushing the markets this afternoon. So that interest rate decision is going to dominate headlines for both the euro and the pound. But remember, we've got those two fundamental data points happening back to back. Now, Zuckerberg is now asking for patience from investors. If you're with us, part of that earning call, Zuck is under quite a bit of pressure. He really fumbled on a lot of the key questions from investors in that call. You guys that were with us, if you're with me in that earnings call, just put your hands up so I can see who my MVTs are. But ultimately, we saw Zuck really fumble on that earnings call, right? Some very straightforward questions. He really struggled to give really clear answers on from that perspective. So he really fumbled on that one. And we obviously want to pay attention as to how that will move Meta's share value. We saw that the after hours trading had dropped well over into the 18% territory. And that obviously had a knock-on effect on NASDAQ, which we've seen push over in the course of today. But the markets are not speaking about GDP, right? If you go into any US sites, right, you're not seeing anything about the impact of the gross domestic product and what that could do for the dollar and what the knock-on effect is on for the markets, right? Futures waver ahead of US economic data, right? And that is in essence what the summary is going to be. Futures markets, much like current markets, except, you know, futures in terms of where it's going to be in the future. And this GDP data is going to rock the world. So let's have a look at some of that fundamental data and what we're going to be looking at and what are these items that are going to essentially be pushing markets today, right? We don't want to see that rubbish over there. We know the Globex 360 is the leader. You can take their ad and go fly a kite. Okay. So ZAR PPI came out. produces price index positive for both. It seems like a positive number or positive data point, but remember, that is a number that is in line with inflation, right? So good PPI, CPI numbers temporarily strengthen the currency, but it's really bad for inflation, right? PPI produced price index 16.3%, big standard deviation. But we're not here for that. We don't care too much. I don't care too much about the rand today. I'm more interested in the interest rate decision, right? Coming out in 2 minutes, there's a full fat 75 basis point hike expected on the euro. Now, what does this mean and how do we map this out? So I'm going to help and go through this process with you guys as we lead into digesting this fundamental data into live trading, right? So interest rate decision we're going to focus on. And then initially we got some initial jobless claims and we got some, let's see, GDP quarter on quarter for Q3. Now, GDP quarter on quarter Q3 is going to be massive. We are going to focus on that directly after the interest rate decision. But I want to take you through the process of understanding some of these fundamentals and how to just break it down, understand it in a very basic way. You know, we get a lot of these questions after the show. You know, how long will it take to understand these things? I'm going to show you the process that I use, and that's why we wanted to start a little bit earlier, so I can show you just a very simple way of understanding cause and effect within the markets. So what we're going to do is we're going to open up this gross domestic product, right? And all we're looking at is what has been the past in terms of what has been those GDP numbers and what has happened. We're going to start off on the interest rate decision. Apologies. So we'll start off on the euro because that's coming out first. That's going to be interest rate decision. So if we have a look at the last period, right, we don't have a lot of data from 2018 to 2022 because there hasn't been interest rate hikes, but we can see the last three. And what we want to do for this particular case study is we want to mark these off on the chart. So we want to look at the 21st of July, we want to look at the 8th of September and the 27th of October. So that's what we're going to do, right? 21 July and the 9th, 8th of September, right? And what we're going to do is we're going to utilize Euro USD for this. Ooh. Yo, I'm trying to drag my charts like it's the new system. It hasn't taken me long, and I'm already not even used to MetaTrader again. MetaTrader just feels archaic, right? So we're going to go down to a 4 hour, I think, just to make it a little bit easier. And we are going to search now for the 21st of July. There we go. So we're going to put that marker there. We are then also looking at the 8th of September. And today is going to be the 27th of October. So 8th of September. There we go. Okay, so those are the last two interest rate announcements, right? Now what we want to do is we want to dive in, and we obviously just want to understand what level of volatility did we see in those moments and in those times. Oh man, I hate MetaTrader. There we go. I'm starting to dislike MetaTrader more and more, if I'm honest. Like the more I have to use it. Oh goodness. Okay, so let's have a look at what ended up happening here. And this is a 30-minute time frame because we just want to understand what is the economic impact of these announcements, right? Now we can see that initially, right, when we look at that interest rate decision that we previously got, right, in terms of when it came out, we want to look at the time specifically, right? So what is important to us now is that at 2:15, the same amount of time, so 6 minutes from now, we got that interest rate decision, right? Let's mark that on our charts. Now remember, 2:15 on the chart is going to represent the 1500-hour candle if we're looking at a 30-minute time frame, right? So what I would like to show you here is the amount of volatility on the euro when that interest rate announcements happen, specifically for that period and obviously directly afterwards. So the euro rallied 100 pips, right? So Euro USD went up 100 pips and fell 100 pips. So that's a 200 pip move in the space of an hour, right? I just want to point this out because you need to understand when there's volatility, right, how to position yourself from a risk perspective, from a stop loss perspective. And this is the same exercise that I do when I'm studying a market and I want to get involved in that trade. I want to obviously look at as much information as I can to make as informed of a decision as I can. Now, also to pay attention to is that July interest rate move was the first time we got an interest rate increase, right? So the first time the market have had information to absorb was the first one. So the first and the second ones don't always run in correlation, aren't always exactly the same. But I want to point out here, the first interest rate announcement was only 50 basis points, so 0.5%. The second one was a full 75 basis points, right? The third one, which we're seeing today come out in the next 4 minutes and 30 seconds, that is again another 75 basis points, right? So first one only 50, then we start to get those 75s. Have a look at what happens to the euro, right? Because now the markets understand that a high interest rate means essentially strangling the economy. They're making it harder and harder to get credits, right? Cheap money, because the interest rate becomes more expensive. So these interest rate decisions are essentially trying to slow down the growth of the economy, removing as much liquid cash within the economy and slowing down spending to avoid inflation. That is the big issue. Inflation is the big issue, right? So at the second interest rate that we got in September, markets now understood what that meant. And let's have a look at the time of that announcement, right? So we're looking at that 14 candle, and there it is right there. So we're spot on the money there. Let's remove this because it generally skews. There we go. So there we can see we had a 70 pip move, and directly after the move, we had some sort of pullback and retracement and then continuation. So I just want to draw your attention to that. So anything on the euro, right, on a 75 basis point hike relation, I expect to start to see that fall, right? Again, in line with our analysis from this morning, we are also aware that we have this structural support here. Now, I'm really glad where we are from a trade perspective. And again, I've already made that trade on our brand new platform, right? So let's have a look at how that looks and how that is materializing. There we go. So there's our trade on the brand new platform, right? And the market's already moving. It's in for a sell. And we can see that our trailing stops have already started to engage on that trade setup there, right? So our TP is all the way down there. Trailing stop is already pulling this market down, right? We're no longer sitting at $50 risk. We now only have $15 risk in terms of this move down. So there's the trade placed, and there we can see the same trade on MetaTrader, right? There's my TP, there's my stop loss. Just absolutely amazing stuff. So easy to set up. So I'm looking at shorting Euro USD, right? Temporarily, right? Because again, that weakness in the euro, right, means that Euro USD will start to fall. But again, remember, just please remember, we also have US GDP data coming down in the next 15 or so minutes from now. So we could get some temporary weakness on the euro, but then we could also get some weakness on the dollar. The weakness on the dollar could overwhelm the weakness on the euro, right? So it's a bit of a tricky thing. We need to obviously understand what the data looks like on the dollar. And again, the European Central Bank is expected to do that 75 basis point hike. They could do more, they could do less. And that is why we obviously watch out for those numbers and we have a look at the cause and the effect on the market. So for this trade, what I'm going to go ahead and do, and maybe I'll go ahead and place it on the new system. I'm going to be placing short orders, or I'm going to be placing sell orders. But essentially what I'm going to do here on this stop loss is I'm going to go ahead and close the setup over here. Well, not close the setup, apologies. I'm going to change the trailing stop to rather be in line of 5 pips. And I'm going to change that, and immediately you'll see it moves my stop loss there into that region, right? And you can see the pip count. And as this market moves, it's just going to drag my stop loss. So really great. I can do it in percentage of my account. And if I go and have a look there, it's adjusted as well on MetaTrader. So again, I'm looking for that short on Euro USD, just from the perspective that we are in the structure, we are at support now. If we get a breakthrough, then obviously I would like to hold that as a trade setup. Should we get a bounce off of this and the European Central Bank comes off dovish, right, a lighter than 75 basis point approach would be bullish for the euro, right? So I'm actually not going to go into entry. I'm just going to leave that right there. Please also bear in mind, if you're still in your NASDAQ sells, right, we are going to be trading the New York Stock Exchange open when we get that open a little bit later. I'm still in my sell. If you traded with us last night, we were obviously looking at the long-term sell, but obviously aware of that volatility. Markets didn't sell immediately. We gapped the markets built back up, and then markets continued that sell-off, right? So even if you sold at the last point yesterday, you should be running well over 400-500 pips in profit. If you retook those trades, we're currently running about 1,200 pips in profit on that trade alone, right? I explained this morning in our pounds for breakfast session that I would be looking for those sells on US30 and looking at those moves on NASDAQ, right? Let's have a look here. I'm looking on a 30-minute time. There we go. Right, so we've got a temporary push down, push back up. US30 does not seem to phase there. Right, so let's look at some of that fundamental data and what we are getting out of the markets. Let's quickly have a look here. Okay, we should get the numbers in. So we're just waiting for those numbers to come in. I generally do one refresh just in case, because I have had it at times before. I'm just sitting staring at the chart and I'm not getting any sort of response. So we got that 2%, right, in line with the expectation. There was no reason to believe that the European Central Bank would deviate, but we are then getting those sells off of Euro USD, right? So yeah, we are going to see that weakness on the euro. It is in line with the expectation, but all I'm doing is popping in one trade. I would like to see Euro USD break through that barrier. As we know, this can run for over half an hour after the interest rate announcement has been made. Now, another thing I just want to bring to your attention while looking at this Euro USD trade setup, I think most importantly is just from a risk perspective, where we could place a stop loss if we're dealing with this from a risk perspective, right? I just want to draw your attention to the fact that our last decent or major structural resistance, standing resistance, currently sits at that level over there, right? So we're getting a little bit of a spike down, we're getting a little bit of a pin bar. So in order to hold this as a long-term setup, you're going to be wanting, you know, a 40-50 pip trailing stop looking at the euro dollar. However, if markets are factoring in a much weaker dollar, then again, we could see some sideways movement on the euro dollar. And that's just something you obviously want to be just cognizant of and obviously pay a little bit of attention to. So I'm just going to hold this one. I'm not going to be doing much there. I've entered in a second position and I'm just literally going to be holding a euro dollar short, right? I'll put an alert there really quickly. But the big news and where I feel we're going to make good opportunistic trades here is definitely going to be around that weaker dollar when we get that GDP data. So I want to show you this. It's going to be pretty crazy. So let's move on into the dollar index, which is right behind me right now. And I want you to see this, right? So the dollar index is in a beautiful downward spiral at this point in time. We can very clearly see, right, from the dollar's perspective, right, we are in this little bit of a market formation. Now, I'm glad we've made some sort of pullback, because at the time of analysis, I was a little bit worried that we hadn't yet made some sort of meaningful pullback, which we're now doing. And also from a 4-hour time frame, we are well under structural resistance and support. Now resistance once was support. So the dollar is in a key position to start hemorrhaging value in relation to some of the other currencies and setups here. I just want to also point out that we are on the same page from in terms of the previous interest rate announcement. Let's get into this, right? In terms of the previous gross domestic product, sorry, I don't know why I say interest rate announcement, right? There is currently an expectation for today of a positive GDP growth, meaning they're expecting 2.4% nominal growth on the gross domestic product for the US, right? We've received those negative data points, right, for the month on month, but this is going to be a quarterly result for the whole quarter, right? Quarter on quarter. So for the last couple months, right, we've got some monthly data, and then we obviously look out for that quarterly result. Now, the last couple months have been negative GDP growth. Now, why is this important, right? This is important because Q1 negative GDP growth, Q2 negative GDP growth, and the definition of a recession is 2 negative growth quarters back by back, right? That's the definition. So when we start to get a third, if we get a third negative quarter on the dollar, it's going to be really bad for the US dollar, right? And I think that's just something I want to draw your guys' attention to. And again, in line with this, we have the interest rate announcement next week, Wednesday. That interest rate announcement that we got previously rocked the markets. So that is obviously what this GDP is going to be setting up before that next interest rate announcement. So I just want to bring your attention to that. Now, let's have a look at what the previous results were and how that affected the markets, right? I just want to go into the quarterly data. I think this is important. I want to go into the quarterly info. I'm not looking at the month. There we go. Q2 preliminary, right? And then they get revised data, right? So I don't really like this revised data. I like the first number for that quarter. So Q1 negative 1.6, Q2 negative 0.9. And that was on July 28th, 2022. Let's give that a look quickly. So USD nicely in profit, but we're just going to continue looking. Let's use Euro USD as well, right? There's no harm in doing that. July 28th. Sure, it's July 28th. Let me just double check. Seems July, yeah, 2:30, July 28th, 2022. Okay, so on euro dollar, we got that GDP data result, right? Bad for the dollar, and that's why the euro started to buy out against the dollar, right? On the previous data set. So a bit of a collapse just leading up to the GDP data number, and then we get that move towards the top side. So again, we want to make sure that we're on enough profit by the time that dollar GDP data comes through. So you should all be in profit as of now, depending where you've entered, in the region of 20 or 30 pips. So this is what we're going to do, right? For the first 3 or 4 or 5 people that go ahead and take a screenshot of your profits, go and tag us on Instagram. You can go and tag at GlobeX360, just GlobeX360, no dots, no underscore, no fakery like that. There's a page trying to currently scam our clients that is a GlobeX360 with an underscore at the end. Ours is a straight at GlobeX360. That's it. The first 5 people to tag us, showing us your Euro USD sell profits, I'm going to be inviting you to a special program to come and test out the new platform. All right, so if you want to be a part of that, let me know. If you want to go ahead and tag me on social media, it's going to be Dane DVD underscore. That is my Instagram username, right? So if you want to go ahead and tag me, take a screenshot of your USD sell profits, go ahead and tag me on social media as well as GlobeX360. First 5 people to go ahead and do that, I'll invite you into a special program to come and test out our brand new platform, right? It's unlike anything else. Now, what we want to do is we just want to secure these trades, right? We're going to put these trades into profit, right? From a stop loss perspective, I'll go to a 1 hour time frame, right? And we just want to go ahead and just move stop losses into profit here, right? Alternatively, you can use a trailing stop because we are going to get that GDP data coming in the next couple minutes, right? So I'm going to utilize a trailing stop. Remember, this is in points. So when we're measuring points here, for every 10 points, it's 1 pip, right? So I'm going to essentially, let's do maybe, I think, let's do 15 pip trailings or 15 point, 150, what? Doesn't seem right. There. Oh, that's way too tight. Oh, I might close my trade because I put the wrong points in. Okay, so I'm using a 50 point. If you're still on Metatrader, okay, never mind. Never mind. It was way too small. What? Okay, there. I'm going to use an 8 pip trailing, 80 points, which is 8 pip, right? Because again, we just want to make sure that Euro USD doesn't spike back up. But remember, our target for this trade is not the Euro USD, right? Again, a weaker dollar means indices will rally, commodities will rally. So this is where we want to focus. Let's give it a look, right? So we're going to move into having a look at where we could potentially take some advantage of markets. And what I've got here is I've got US 30 on the far left, right? If you look at that spike through, I've got NASDAQ dead center, also a bit of a spike up. And then I've got German 30 on the right hand side. Now, I don't believe that the GDP data is going to have as much of effect on German 30 as an example, but we're obviously just going to pay attention to it anyway. I just want to resize these charts. There we go. Which one doesn't need to be here? Ooh, okay. So this is meaningful. I just want to point this out really quickly, right? So I drew this a little bit earlier. Something that we obviously just need to focus on is having a look at, you know, the spike that we're currently seeing on US 30, right? Is this spike going to continue to the top side? Because again, right, and what I want to do, actually, what I want to do is I'm going to grab a US 30 buy, right? For a reason being that, you know, before this market moves, I want to be in a US 30 buy, right? For the reason being that we are going to get that interest rate or GDP data coming out in the next, let's see. It's covering my clock there. Oh, there we go. 3 minutes and a bit, right? So again, if the US GDP comes in line with the expectation, it's a temporary good thing. Just under expectation, it's still good because it's in line with the Fed's interest rate sort of achievements. But if it misses GDP, if we get a slightly more negative than standard deviation allows for, that's obviously going to cause a massive ripple effect on the dollar, losing dollar value, but then ultimately allowing indices to spike topside. So I'm not entering all of my trades, right? I'm just putting in a feeler trade so that if markets run, I'm not left behind, right? If it takes me out on a feeler trade, you generally don't want to risk more than 1%. So a feeler trade is just putting your foot in the door. It's not your whole trade. A feeler trade is just putting a trade in so that you're in the game. You've got some skin in the game. You're watching this thing run. Just bear in mind. When I see a market, I see a lot of things I like, I'll pop a feeler in. If it starts to move in the direction I want, I will take some of that profit and take that 1% of my risk. I will move stop loss into profit, and I can re-risk 3% and take some of that profit and reallocate it towards my next stop loss, allowing me to open bigger trades if I'm right. If I'm wrong for 1%. If I'm right, the risk reward ratio changes substantially. Okay, so we are about 2.5 minutes away now. Let's quickly give a look into NASDAQ, where NASDAQ is currently sitting. I'm actually just going to close. I'm going to close German 30 for now. There's so many NAS charts. Let's close that one. There we go. Okay. So I've got two US30 charts here, right? One representing my 1 minute time frame, another one representing this little bit of a spike out of this descending market structure. So one view is just isolating that market. The other one is just, you know, looking at the holistic side of things. So again, a weaker dollar could fuel a rally, right? So a weaker dollar, should we come up and retest, we get that weaker dollar, we could see that massive retest towards the downside. Okay, so we are going to have a look at this. Let's quickly check our inboxes. We have a few seconds here. I'm getting telegrams. Let's have a look where these telegrams are coming from. Okay, so I see inboxes, right? But it needs to be tagged Globex 360. So I don't even care if you tag me or you don't tag me. I got no issues there. But at least Globex 360 has to be tagged. Remember, we have Globex 360 live TV because of Globex 360, right? Giving traders what traders want. And it is an expensive program, guys. So, you know, when we talk about tagging Globex 360, it's really about just saying thank you to the team for all that they're doing to make these kind of things possible for us. So let's have a look at who's tagged who. Let's see. I got inboxes of people doing things. There we go. Oh, beautiful. So who is this? This is Rowan. I can see Rowan got in on some Euro GBP buys. Welcome, Rowan. Let's see what time that was. Oh, that was early this morning. That was way early this morning. Okay, that's not part of that. So remember, Broad's qualified has to be tagged on Globex 360. Even if you tag me directly, it won't count. You have to tag Globex 360. Tag me as an optional extra. No issues over there. Okay, so we're seeing a slight build up here, and this might be that markets are expecting some sort of positive GDP growth. So we're obviously going to have a look at that. Again, positive GDP growth would be a Euro USD continuation on that sell, because it would be initially strong for the dollar. We've also got a continuing jobless claims, right? We do need to pay a little bit of attention to that. And yeah, initial jobless claims is obviously what we want to be paying attention to. Durable goods order, right, came in negative. Initial jobless claims slightly under expectation. Continuing job claims over expectation. So these two are going to balance each other out. Let's have a look. We're really looking at GDP items here, right? Gross domestic product is positive, beaten by quite a good margin. Okay, so that's going to be good for the dollar and bad for indices, right? So I'm going to temporarily just start trailing my stop on US30, right? Because it's already moved into profit here. So I'm just going to hold that temporarily. And I'm just moving my trailing stop into order. Euro USD, let's have a look here. Good for the dollar. So euro is essentially going to buy less and less of the dollar. So we should see those continuations of that sell. Now, again, a big gross domestic product is not what the Federal Reserve is looking for, right? Meaning that this further moves into line of them coming in absolutely swinging the time we're obviously going to move into these Federal Reserve budget meetings. So I'm going to pretty much keep a Euro USD open then in that particular case. The euro is going to buy less and less of the dollar over an extended period of time. Let's quickly have a look at how the dollar index is reacting to that. Dollar index is pulling back also slightly. US30 is remaining in that position. NASDAQ, right, funny enough, had the biggest spike in the markets. Bit of a market structure break here. All of the price action is pointing towards indice longs. Let's see how gold is in line with what we think it should be, right? We're getting a bit of a push down, but markets are stabilizing there. US30 is making a play and NASDAQ is making a play to the top side. So for some reason, the markets have interpreted this as a weaker dollar, right? Let's see here. Yeah, markets are interpreting as the weaker dollar, right? Euro USD is buying up more in terms of the dollar, but let's continue to hold this. Let's see what ends up transpiring here. I would certainly like to be in a NASDAQ buy as well as an indices buy, right? You guys know my opinion about that being the future direction from a long-term trend perspective. So let's do this. I've got to change some camera batteries. That's pretty important. Otherwise, we're not going to have a show. So what we're going to do is we're going to do a quick intermission. We've been live for about 45 minutes already. So we're going to allow these markets to simmer and settle. Remember, we have all the way until New York Stock Exchange to take advantage of big market moves here. So we're going to listen to what data's come in, understand and interpret, break it down, and then take some positions based on those informational cues that we've got there. So let's have a look here. Yeah, so spikes everywhere, but not seeing continuations of those spikes, right? So we're just going to leave it and let it settle. Euro dollar, let's have a look here. Yeah, nothing outside of expectation at this point, right? So we're just going to allow these markets to do what they want to do over the next 2-3 minutes. Remember, catching the spike is great, but what you want to do is catch the long term. We want to catch the long-term outcome of these decisions. Catching the spike, amazing. Premeditating, amazing. Penning orders, amazing. But what we're looking for is catching the whole move that will come as a result of interpreting this information. That's what we want to do. Even if it's a buy, we'll wait for a pullback and we'll get in on the pullback. If it's a sell, we'll see market structures break and we'll get in part of that. But what we're going to do now is allow a quick break so we can change some camera batteries, get some fuel and water in our bodies, and then we will jump right back into it. So we're going to go for a 10-minute intermission. That'll be enough time. It'll allow the markets around 14-15 minutes to bake in the data that they need. We will then come back and then we'll end up trading and building up towards the New York Stock Exchange open. So that's what we're going to do. We're going to do a 10-minute intermission and I'll see you guys back. If we see a massive pin bar on indices, right, I expect to see that this afternoon because the data that we're seeing should not be immediately positive for indices, right? Again, we can be wrong. There can be manipulation. It can be in line with what the markets are saying. But if we see a big pin bar, it's going to be an immediate entry towards getting short and taking advantage of those markets. So we will diagnose this a little bit further, but for the time being, we're going to take intermission, listen to some good music and or some good jams, and we'll see you guys in a bit. Okay, beautiful. I changed the timer there, so if I caught anybody out of turn, then obviously just remember I just changed the timer, that's all. Okay, so I changed the timer for the reason being that we're starting to see a bit of failure on the markets. Remember, as we just stopped off before that intermission, I said that we want to just look for seeing that pin bar towards the top side, right? We're getting a massive pin bar showing us that weakness in the markets, but at the moment it is still indecision. It's not yet confirmed. What we can do, we can take advantage of US30 by utilizing the following market structure. And what we want to simply do here is we want to wait for the break in structure. And we might even find that is going to be useful to us. Not as useful, but we'll keep that line intact. But we want to just look on a minute time frame. Do we fail and fall below that market structure there? Just looking to have a look at the RSI really quickly. I just want to see if there's any hints here. Okay, the RSI is giving us no clues as to where the market is losing or gaining momentum. So I'm just holding in a feeler trade for a sell there. Yeah, because I'm looking at where the markets are currently losing that value. Major pullback, but again, this can just be a fib pullback. If we look at the greater push there, we can see that is a 61.8 pullback. So above the 50, I would potentially get out this trade, or even the 38.2, but also understanding we do have this diagonal market structure here that price is essentially holding into. So we obviously just want to see where that materializes. In the chat, if you guys can let me know if we break below on a minute time frame or we push above. I've got one trade in there that I'm just going to hold at above that 38.2. So yeah, in general, we're seeing a similar thing on NASDAQ. NASDAQ made that initial thrust, but then kind of started to really lose a bit of momentum. Losing momentum is not the end of the world. A market can still pick up momentum and continue, but obviously we're just looking at that little bit of a loss in momentum. German 30 really doing some crazy things this afternoon. Let's just see here from 2:15 started that push again. Remember, also highly sensitive towards European Central Bank conditions, have thrived off of that. And as we remember, the stock markets prefer interest rate increases. So if you guys are with us on our recession analysis of interest rate increases, we've seen over the past US markets, stock markets have performed and thrived under increasing economic tightening. So interest rate decisions, announcements to increase interest rates, US stocks have generally performed better under those circumstances. We've seen over the 6 months that hasn't been the case on the US market. That is certainly the trend across markets overall. So the very big question and key in my mind is that, will we see markets rally off of an increased interest rate announcement? Will we see the dollar fall? Because on that interest rate announcement that we received previously, the dollar gained strength and the markets fell, which is inverse to how recessionary transitions have happened in the past. So that's obviously going to be key for us to understand, and obviously key to keep our eyes on. Looking at it, all right, so US30 definitely wants to make a further up thrust. We're not getting past that support, but we obviously want to just make sure we break through that previous resistance level. At this point in time, very choppy, and obviously remembering we obviously still have the New York Stock Exchange open. New York Stock Exchange open will then determine the direction that we chase in terms of indices for this afternoon, both on NASDAQ as well as US30. In terms of that continuation towards the top side, I'm not going to chase it because it looks like a very short-lived type market structure, and it can just be a bull trap, right? It can catch people in a bunch of long orders, meaning it's broken through resistance. It's given all the technical reasons to be going long, but again, I don't fully trust it. I'm a little bit skeptical of this push through to the top side. So when skeptical, right, it's far better to remain in a cash position meaning money in your trading account when uncertain, than to go all in a YOLO trade that doesn't meet all of your technical conditions as well as those internal feelings. You're going to have those gut feels from time to time, and something just doesn't feel right. If something doesn't feel right, there's no need chasing a market. It's absolutely okay to just watch and then wait for the markets to confirm their decision. Remember, based on the GDP data that we just got, based on what we're seeing in the markets, the GDP data should cause a stronger dollar. It should cause a weaker indices market based on how it has reacted in the past. So again, I've got a little bit, my spidey senses are tingling in terms of an indices buy. Traditionally, we would like to see that fall. Now, again, the New York Stock Exchange open, that is going to happen at 3:30 today. That would confirm what that position is. So if I see a spike on US 30 to the downside, close to on the New York Stock Exchange, I will chase that spike, because in relation to what I believe from a fundamental perspective, the spike would break support. So it's in relation to my technical analysis, and it supports the sentimental view based on past analyses on these particular markets. So that checks more boxes for me than a buy at this point. So there, check out that massive move. We're starting to get towards the downside. We're starting to get markets thrusting towards the downside for that sell. I was a little bit early on the sell. We are on support here. Just I want to pay attention to that, but I want to just show you and obviously make sure that you also understand that, you know, we are basically under support at this point, right? We got support below us, yes, but in terms of where this market is really taken off from, we can start to see that we've really, you know, lost that momentum towards that area over there. So looking at these spikes, right, we could see these another spike to the top side, but we could also start to see a market structure start to develop that we could end up trading off. So if we get another spike that does not exceed the 38.2, right, then we are in a confirmed, you know, a little bit of a sideways but descending market nevertheless, right? And that's what I would want to see from a sell perspective, right? Looking at what we understand and believe from a fundamental perspective, that would then be confirmed, right? And I'd be happy to then get into that. Now, again, it is possible to be wrong. As with all things, trading is not about being right, but about when you lose small, when you win big. That's the bigger game plan here, right? So I'm not going all in, and I'm not adding all of my volume in. I'm just literally waiting out and remaining cash positive until we hit that New York Stock Exchange session a little bit later on, in roughly around about 40 minutes from now. So we still have a lot of time to go, and that's perfectly fine. Looking at the NASDAQ, right, we can start to see we're getting a little bit of a symmetrical triangle, right? So NASDAQ's giving away that the markets are a little bit unsure at this point about what they want to do with this information. And that's within expectation, right? But what I want to do quickly before I run away with this, I just want to get into the numbers, because I didn't fully digest what happened here. We just looked at GDP number, came out positive and ran with that. So I just want to go back into continuing jobless claims, right? So pretty big standard deviation, right? They expected going from 1.383 million people to 1.388, right? So they expected a lift in jobless claims, people filing for unemployment, around about 5,000, if I'm reading that correctly. 1.438, right? They got unemployment claims that are roundabout in the region, and I'm going to just round off here, but 50,000 more people filing for unemployment than expected. Initial jobless claims, right, in terms of the first readings that they're starting to do, did come in under, but the continuing jobless claims for the month, obviously that is obviously coming quite higher. So again, this will also affect NFP, right? Meaning that the continued job loss claims, those numbers essentially go and get added up, and that is how we start to get NFP figures. So anybody's, you know, confused about NFP and how does that work? We get a continuing figure, right, which is an addition of the previous weeks, and then we get an initial for that particular week. Those numbers are generally added up, and that's what analysts use to forecast what is the strength of the US labor market. Remember, NFP is also next week, in addition to the interest rate decision. So that's obviously going to be quite big. But these two numbers essentially balance each other out. The initial one generally counts for a higher value, but in essence, continuing jobless claims. So I'm getting messages. Okay, so people asking, creating new accounts and saying, you know, can I jump in and assist them with setting up their accounts, giving them a strategy? Guys, you need to understand that we have thousands of clients around the world, right? It's not feasible to jump on a call. At the moment, I'm sitting on 2 or 3 hours sleep in the last day. So since we were live yesterday evening and we finished at 1 or 2 this morning, from that point in time till now, I'm sitting with about 2 or 3 hours total, right? Outside of meetings. So to sit individually and go through setting up your MT4, right, not feasible. There's lots of Google alternatives. Our new academy is launching extremely soon. It will cover that, but please take some initiative and just do some Googling. I promise you, you will come right. And the reality is, our brand new platform is coming super soon. So you want to be a part of that. You don't want to miss out on that, right? This is super easy to use, so straightforward, just absolutely amazing in every single way. Yeah, I can't wait for this. So those of you who have tagged on social media, let me quickly go ahead and have a look at that quickly before I end up forgetting. Let's go have a look quickly. I saw a lot of tags after the fact, so let's just have a look here. Okay, so I can see here Kondisi has tagged us. So what is going to happen is each person that's tagged here, I can see Mano has tagged us, Pretorius, well done. I can see Mackenzie has tagged us, well done. I can see Josh has also tagged us, well done. So what I'm going to go ahead and do is also Rowan. No, Rowan was yesterday. Rowan was this morning. Let's just have a look here. Okay, so for everybody that's tagged us, right, what we're going to go ahead and do is we're going to invite you to what we're going to be calling our insider program, right? And an insider program just basically means that you're going to get first access and to help and test us with a lot of our new features and functions we want to roll out to the community. So the order of testing is we test internally, we distribute them out to the team, we stress test, we break, we look for failures, and then we release to our first set of clients, which will be part of this insiders program, right? So I will look who's tagged us. Obviously, I want to make sure it's people who've obviously been in the academy or been with us for a period of time. And then we will obviously assist and jump in to bring you into this insiders program. So you get to see a whole bunch of new tech, test it out, give us feedback, tell us what you're thinking. And that's exactly, where you want to be from that perspective. So looking at US30 currently is still trending up, more than likely going to complete that price action structure we just drew out. It's ranging up. You can see these candles are losing momentum. So when we lose these momentums, we can see either a massive pop, right? Or we can see a massive rejection. So let's hope it's not a massive pop, because I would not like to chase US30 to the top side this afternoon. That's really not what I want to be doing. I'd be much happier with a sell. Again, I would like to see indice markets as a whole recover and get better. But yes, I wouldn't like to chase this for a massive buy this afternoon. So let's just quickly have a look at where we sit from a fib level. Yeah, so we're sitting quite a bit above support on that 50 fib, meaning there is a lot of room to the top side, but there's also a lot of room to the downside from a sell perspective. So again, I would like and feel more comfortable with a sell chase as opposed to running this thing from a price into the sky perspective. So nice little ranger. It's respecting the little bit of price action we have drawn out, but we need to now obviously get through and not push through and thump through this 23.6 to this next this last spike that we've got. So if you want to remain cash neutral for this afternoon until the New York Stock Exchange, perfectly wise to do so. I would only start to go in really serious and place some serious orders once we have confirmation and direction of market structure. You can see here just by reading price, just from reading candlesticks, right, there's quite a bit of indecision here. And this generally, means that there's something big that is coming. Markets are essentially trying to understand and fully integrate what is happening here. So we could then see a pretty big pop anytime soon. I'm hoping that pops to the downside, but anything is potentially possible. So Euro USD starting a little bit of a range here. You may want to start to consider taking profits closer to entry as we reach that little bit of uncertainty. Remember, a weaker dollar will cause Euro USD to buy. Now the question is, a weaker dollar and weaker euro, between the two, where is it going to go? The reality is, which one is weaker? Which one is more important, right? How weak will the dollar get versus how weak is the euro? We know that this interest rate announcement is negative net for the euro. It's got a bad impact. But yes, I would definitely consider which one of those two are going to be more important. So we are at entry here. On the euro, I'm going to essentially close this one out, free up some of my profit here. So I'm going to close up just in a little bit of profit, not ranking up much there. And I'm just going to focus now on having a look at where markets are from an indices perspective. Looking at gold, right? Gold is an indication that, we initially got that spike down on gold, and a spike down on gold would mean a stronger dollar, right? So a stronger dollar is in line with that gross domestic product that we got. A spike down is in line with what we should be seeing on an indices perspective. So the fact that indices are rallying and we're seeing commodities fall shows me there's a little bit of an imbalance, right? And that's why I often reflect back to gold to just understand where is that market structure and where is the market making the most sense. At the moment, the indices buy is not making much sense to me, purely because it's outside of balance, right? So we're looking for markets that are balanced. NASDAQ looks like it's breaking to the top side. US30 may break the top side. I may be taken out of those two, which is perfectly fine. We're remaining cash neutral, keeping cash in pocket for New York Stock Exchange open. So I'm not going to drag those stop losses. I'm going to do absolutely nothing with it. We're just literally allowing that market to do what it has to do there, right? So yeah, it seems like we're in a little bit of a range. You guys know that I really dislike trading ranges of any sort, kind, or nature. But again, massive volatility. Each candle here has 1,200 pips. So, if you're looking at $1 per pip from a stop loss perspective, you don't want to be risking every single candle $1,000 from a stop loss perspective. So I do have a feeling we're going to see a break to the downside. I'd love to get a trade high up, right? But again, when you're wrong once, if you're wrong twice, obviously you don't want a revenge trade and you don't want to hold on to the sentiment that it has to do this. There's an old saying that, markets can act a lot crazier for a lot longer than you can remain sane. Meaning that even if you believe the market's going to do something specific, and they very well may, they can be a lot crazier and sideways than you can remain sane. And generally the end of sanity is placing a revenge trade. It's saying, well, I lost this one, I'm going to go double. I lost this one, I'm going to go triple, whatever the case may be. So I get caught out also like this from time to time, where I'm absolutely certain everything points towards markets moving and in a certain direction. I have this opinion and I want it to be right. The data points out, done the research, and markets just don't want to do that, right? And it's very hard to shake off that. You build a sentiment towards what should happen. Sometimes you just got to allow markets to play out, give you a clear focus or view of where it's going to go. And I do believe, based on what we're seeing now, New York Stock Exchange is going to be fire. So we should see some really solid moves from the New York Stock Exchange open. Looking at USD ZAR, again, that temporary weakness on the dollar, we saw it, right? But we're not seeing that massive, that temporary strength of the dollar. We're not seeing that massive dollar strength, right? Represent or translate into this USD ZAR type setup here. So my stop loss is much further down. I'm just going to tighten that up on USD ZAR. But yes, a stronger dollar is what we should be seeing, right? But I think also the markets are starting to wise up and understand that a stronger dollar or stronger fundamental data only further adds fire to the Federal Reserve's bullets and ammunition in terms of what they're going to shoot out of the sky, right? Because if the dollar is too strong, they're going to come out swinging. They're going to chainsaw, bulldozer. You never know what's going to be happening. Be on Call of Duty while waiting for the big moves. Yeah, absolutely. If you're trading on mobile, that's the place to go. Pretty much saying, if you check on 15 minutes, 30 minutes, we made a W pattern. We were testing the neckline, shooting straight up now. Yeah, maybe. Let's have a look here. US30, 15 minutes. Yeah, in terms of that thing, shooting past that neckline, the problem with that is, again, just in terms of chasing it to the top side, a stronger dollar is not good for indice markets. So I get the price action side of things, absolutely. But what we've seen as well is that markets take a little while to observe the data. Sometimes even the data is perfectly clear. Take an example, last night Meta's earnings, right? So last night Meta earnings was a disaster. We knew it was a disaster. Meta's share price fell. It's a big portion of the NASDAQ. However, the NASDAQ retraced, right, from getting the data. It built up in value and then started collapsing. So even though, we know that price action can be traded in such a format, we have to consider those fundamentals and rather wait for the fundamentals to align with the price action than see the price action only and leave this sleeping dog in the kennel, just hope it doesn't come out and bite us, right? So that's the way I prefer to sort of think about it there. But yes, USD ZAR, Euro USD. Let's have a look at what else is happening in the markets. Let's have a look at USD JPY. So USD JPY is an enigma, right? In terms of how it's currently moving and where it's going. I just want to point this out really quickly. I believe it's on a daily, right? So if you have a look at the price of, and you look at where USD JPY is currently doing, we can clearly see that, we have a little bit of an imbalance here, right? We've got higher highs on the price action, and we've got those lower highs on the RSI, right? So very, very clear. Doesn't take a rocket scientist to see that. However, we are failing to break make any sort of meaningful downturn on USD JPY, right? So a weaker dollar, right, overall has got so many price action implications across the board that it's almost like you could wait the whole week just for that weaker dollar, or just wait for that weaker dollar to break structure, and that would be, the most tradable item that you can potentially look for in the markets. So USD JPY is to the moon. The yen has essentially gone from $108 yen to a dollar to 151 we spiked out at, right, which is nuts. That's essentially losing 50% of your value, right? And that is not over a long period of time. That's over less than a year, losing 50% of your value. So it's not foreign to us. We've seen this with the rand. It's doable. We've seen it in the past. But yeah, just in terms of if this will come down, I think that is the big question. Obviously, keeping a lot of attention to a weaker dollar and seeing that USD JPY potential sell side or falling downside. Netflix has made a decent recovery. Our Tesla buys from the trade-a-thon are finally into profit. Euro GBP is looking like an absolute mess. And that's mostly because of that spike we saw on the 27th. So just over a month ago, that massive spike there. Also, the current issue plaguing the pound and the euro is obviously going to be those prime minister reshuffles, right? So Liz Trump pulling her 44-day in office and saying, goodbye, basically. Obviously quite important. In terms of GBP USD, this was another trade we could have expected to potentially capitalize on. Should we have got that positive dollar data, right? So GBP USD should have started to break market structure if we got more positive dollar data. So again, even though the gross domestic product has come out positive and better than expected, markets are kind of seeming a little bit neutral, right? Impartial to the dollar move. And I think this is because markets are fully understanding that a stronger dollar or stronger growth in the US economy is not in line with the Federal Reserve's targets of what they need to do to slow things down. So the Federal Reserve has a 4.4% target rate of unemployment in the US to slow down inflation. The Federal Reserve has a growth plan that needs to see certain objectives met. If they don't see it met, they're going to come out swinging in a big way. A lot of economists are fearful that the Federal Reserve could swing too hard and break the economy with some of these policies that they're putting into place. So it's going to be very interesting. The previous Federal Reserve meeting was very hawkish. When I say hawkish, meaning very aggressive. We'll do whatever it takes. We've got the instruments at our disposal. We will get this right. Regardless, we will make it happen. That was generally the tone of the last Federal Reserve meeting. So it'll be interesting. Is there a change in tone? Do we see that change to slightly more dovish? We're massaging these policies in, and we're going to help the economy to get back on its feet. And that's really what I think the markets want to better understand, because I think there is a lot of fear at the moment that the Federal Reserve could over-engineer some of these financial policies and try and aim for a soft landing when all they're doing is making it a little bit worse, right? That is obviously something that I believe the markets are fairly fearful for. So we'll keep an eye on US30. US30 is going through and spiking through the roof there. We're not translating on a weaker dollar, right? So this must be driven. Euro USD, nice push down. If you're still in Euro USD sell, you should be doing well there. But yeah, US30 is going through that original support / resistance. I really don't want to chase it. If you guys are in it for a buy, then massive well done. But I'm really not looking to chase this thing to the top side. I'm a little bit worried when I don't see that dollar weakness, right? And we're seeing indices rally. It could be a little bit of a bull trap, right? It could be, some sort of dead cat bounce that everybody gets into a buy and then markets just absolutely plummet. Now remember, we've still also got Apple's earnings reports, and we've got Amazon's. Is Amazon? Yeah, we've got Apple and Amazon tonight. So again, Apple and Amazon, because of their market cap, because of their value, because their combined value is sitting in the trillions, right? We need to be aware that their contribution towards the S&P 500, towards the NASDAQ, towards US 30 is much larger than some of the other companies we've seen report to date. So any sort of miss in their evaluation, in their EPS, earnings per share, or their revenue has a much bigger impact on the markets, both on the NASDAQ as well as the US 30. So this rally that's building up, right, this momentum we're seeing on the US 30 to the top side, I think is extremely risky, because the higher this thing gets, the more opportunity it has to fall. And what we've seen, right, is that none of the earnings that we've seen till date, neither be Tesla, Netflix. Well, Netflix was a bit of a strange one. Google, Microsoft, Meta from yesterday evening, as well as the ones we're potentially going to see tonight. None of those previous ones that even beat expectation drove the market positively. Investors are pessimistic. Investors are scared. And so even missing it by a slight bit has got catastrophic effects on the market. So even though I like Apple as a company, even though I like Amazon as a company, very, very complex creatures, almost like their own economies, their own countries as a whole from an economic perspective, there's a lot of complexities. If they miss even just one expectation from investors, that's going to have a very big negative net ripple effect on NASDAQ as well as US 30. The biggest effect definitely on NASDAQ. So that's why I'm a little bit cautious of running a buy order here, because I know it's going to be short-lived, right? And again, I'm looking at those earnings reports coming out this evening. I'm just thinking, oh, this is going to be a tough one. But we are currently around about 21 minutes into before we get started with the New York Stock Exchange. So what we're going to go ahead and do, I'm running about 40-minute sessions where I need to take a walk, refresh, breathe it out. So what we're going to do is we're going to take a 8-minute recession really quickly, stand up, play Call of Duty, do whatever it is you got to do, have some coffee, because then we need to buckle down for the New York Stock Exchange open, and we're going to have to keep our wits about us, right? We're not going to be able to miss a trade here, because I think this is going to move quite hard, and we obviously want to be able to take advantage of that. So we're going to need to pay quite a bit of attention. So I'm going to grab and potentially finish up this Red Bull, probably grab another one, do a little bit of a walkie walk, and I'll see you guys in a bit. I'm seeing the chat. I don't know if you guys have got tired, you guys are driving, or what it is you guys are doing, but let's keep the chat alive. Last night you guys were absolute machines in the chat. Let's keep that push. Faiz is saying, don't have coffee, load shedding. Faiz, I thought you were going to say your wife doesn't want to make you coffee anymore because you were late tonight watching the trade-a-thon, and she was like, what are you watching? And I didn't want to tell her, and that's why you don't have coffee. I thought that's what you would be saying. Alvin saying, we're listening, lot to take in, absolutely. So guys, remember, we are going to be, Prima is saying, before you leave, I'm holding a 1,800 loss with 10K equity. Should you continue to hold? So Prima, right? That is already 18% of your account, right? So it should have never got to 1,800 in the first place. I just want to state that. That's the first place. Second place being, what is your absolute risk management? What does your risk management profile tell you, right? So everybody has to have a risk management profile. Some people trade a little bit more aggressively than others. Some people trade fewer times than others. But the reality is each of us have got to have our own risk management tolerance. I've found for me, when I go over 5%, I start making mistakes, and those mistakes hurt me and hurt my account quite badly. When I stay under 2%, it's not exciting for me. I'm trading, a fairly large account, and I'm not seeing the movements that I want to meet or make up to make my profit targets. So under 2% doesn't work for me. Under 5% doesn't work for me. So I find that 3 to 4% is my personal sweet zone, right? So if I lose 2 or 3%, not the end of the world, right? I can do that 3, 4, 5 times in a row, win one trade at 10 or 12%, and I'm net positive and I'm at a break-even situation, right? So you've all got to have your own risk management profile, what works for you, for your style of trading, for your psychology. And if you don't know what that is, I generally suggest go back to 2 or 3% of your total account size, right? And again, how do you do that? Is it just a round number? No, it's all due to where your stop loss is. So if you're entering, let's say Euro USD, let's use Euro USD as an example, then we'll take a quick break. So Euro USD is continuing towards the downside, so you're still net sell, then you are good to go. depending where you've entered, if you entered way up here and you're still holding that trade, you should be in about 50, 60 pips worth of profit. So I would say, at least cover your entry, right? We can see what your USD is doing, and it more than likely is going to start to build some sort of retracement, something like that, right? So just be prepared for a pullback. That pullback will be some sort of fib ratio, right? So we'll more than likely pull up to that 61.8, somewhere around there, or deeper, worst case 70.6. So if you're still on that Euro USD trade setup, then you want to have a stop loss on the €1 gets you $1, 0 cents and 17 pips, or 18 pips. So 1.0018. Right, so let's talk about Euro USD just from a risk management perspective, because I get this question quite a lot. Where do I cut my losses? Where do I take, what you want to make sure, and this is the issue that I found with most traders. I remember we've trained and met tens of thousands of traders around the world over the past couple of years. And the one common trait that I found with traders is that traders tend to hold losses a lot longer than they should, and they tend to cut their profits very, very short, right? So what the big mindset is learn to cut your losses quickly, because what ends up happening is a person will run in this loss and they'll just hope it will recover, right? Hoping it will recover and blowing your account is far worse than taking the loss and living to trade another day. Think about that, right? So if your risk management was incorrect in the first place and you're somehow holding a 10, 20, 30, 40, 50% stop loss, right? Get out of that trade and learn to trade another day. Then go back to your risk management profile and learn to start taking 3, 4, 5% stop losses. So let me show you as an example, right? If I had $1,000 account, let's say I was trading with $1,000 now, right? And I only want to risk, let's do this. So I've got $1,000, right? And now let's say I want to buy this pullback, right? Your USD is pulling back, right? It's all going to come down to what is the lot size that I use, right? And where is my stop loss, right? So let's say on $1,000, I only want to risk 5% total. Let's say that's $50, right? So on a standard lot, if I bought the standard lot now and I move my stop loss 15 pips below me, remember one lot for every lot, right? And we're talking about currency. If you're trading a full lot, so 1.0, it means every pip in the market, which is on a points perspective, every 10 points, every pip in the market, you make or lose $10. So if I'm trading a one lot position and the market moves against me by 10 pips, only 10 pips, that's $100 negative, right? So already I can see trading with $1,000, right? If I took a 15 pip stop loss at a full lot, I'm risking $150, which is 15% of my account. So I already know I want to risk 5. So what do I do here, right? And you can do this with a penny order. You don't have to enter a live order. So I'm going to close this trade. It is in profit, thank goodness. But now I know if I want to be able to trade that trade, I would need to be able to go at a third of a standard lot, meaning I want to get that $150 stop loss down to $50. So I'll enter 0.33. That's a third of a lot, meaning every time the market moves 1 pip, my account will make or lose $3.33. Okay, so 15 pips by $3.33 plus minus, how much did I say? Yeah, so 15 pips by $3.33 gets me to that $50 stop loss. Let's just get out the calculator quickly. So, right, I'm going to quickly do the math. So $3.33 per pip times 15 pips, right? $49.95. So on a $1,000 account, that is where my stop loss should be. If I had a $1,000 account and I'm running negative $200, cut the loss because I did something wrong from a stop loss or risk management perspective. And the next time I place a trade, I want to be better informed. That is the beauty of our new system, right? Is that when you do risk management and when you're looking at placing a trade, the system is going to help you to do the calculations, right? Have a look at how beautiful this is, right? So Euro USD, same story. I don't know what size trade I want to trade, right? So I'm looking at Euro USD. Let's say it's $1,000. Okay, so I'm going to go ahead and put in here, I want to place a one lot position, and let's say my stop loss is somewhere down here. So we're still in testing phase. So we can obviously see bugs. So let's say my stop loss is somewhere down in this region right here, right? So I'm going to put that in and say, okay, my stop loss is how much? 15 pips. Immediately, what it's going to do here behind my head, I don't know if you guys can see that. So right over here, it says that my stop loss is 15 pips, and that total value right there is sitting at $150. So before I even place the trade, I haven't placed the trade yet, remember that. So the new system will help you astronomically with risk management. So if you struggle with risk management, when you struggle with calculations and pip counts and lot sizing, the new system is going to help you to keep things intact. Now remember, you can also, listen to this, you can also set a stop loss in relation to your account size. Now this was something we've been asking for a very, very long time, right? So now instead of setting a stop loss by pips, watch this, pay attention to this, please guys. I'm going to make this a bit bigger for you. Instead of setting a stop loss to pips, I can set a stop loss to percentage of equity. Listen to this craziness, right? So my stop loss must be 3% of my total. Okay, it's going to use this account size, which 3% is like, massive. I don't know whether this 3% of my current account is sitting, $1,100 from a sell perspective. And that would be above us. So let's say, on this particular account, that's using a lot. So let's say I want to enter a 10 lot position and I only want to risk 3% of my account. Where will my stop loss be? And I can only afford 11 pip stop loss. It's behind my head again. Damn. Okay. 11 pip stop loss, which will result in a $1,100 negative. If I only want to risk 3% of my account, it means I can open a 10 lot position on your USD. How crazy is that? Right? That's the future. It's absolutely next level. Now remember, I told you guys, tag me on Instagram, tag GlobalX360 on Instagram, and you'll be invited to the Insiders program. Now you're sitting here, people are going to be trading, sharing screenshots, doing risk management. You're just going to be sitting there. Like, it is what it is, right? But listen, if you're on our live sessions this evening for our trade-a-thon, if you have your $100 account, go check your emails. We've sent you an email with the link to this evening's trade-a-thon. Apple and Amazon is going to be the last big push for this week, so you definitely want to be a part of that. Oh, Peter's not on social media. Okay. Did you send me a screenshot, Peter? If Peter sent me a screenshot, I would still consider that as counting. Oh, Peter didn't send me a screenshot either. Okay. Well, it is what it is. We got to do something, right? It is what it is. But Peter, let me know. We'll sort you out. You're with us all the time. Okay. So anyway, I got super excited. All right. We're supposed to take a break. I got to change camera batteries. I'm surprised this camera is still live, if I'm honest. So let's do that quick break. We don't even have 8 minutes. The New York Stock Exchange is going to open. So let's do 3.5 minutes. No, let's do 5.5 minutes. Yes. Need to down this Red Bull. Right. I'll see you guys in 5 minutes. Change camera batteries. Get fresh. Let's get this New York Stock Exchange off the charts, and then I'll be back with you guys and we'll have some fun. Right. Okay, beautiful stuff, guys. Listen, quick one. Did anyone see the news about Elon Musk changing his Twitter handle to the chief twit, right? And then walking into Twitter's head office with a sink, like a literal zinc that you wash dishes in, zinc, sink, whatever, and then literally telling everybody, let that sink in. He's absolutely bonkers, I swear. Okay, let's quickly have a look at what's going on. Okay, beautiful. What's a new platform you guys are talking about? Oh, Ria's missed it. Oh no. Oh no. Oh no. Okay. Let's see what markets are up to. Oh, there we go. We're seeing how US 30 is starting to tank there. Right. So having a look at that little bit of a tank action right there. Yeah, this is exactly the reason why I didn't want to buy US 30. Okay. So again, we're going to try and look at both of these price action formations, but I think the most sturdy one to look off and to deal with this afternoon is definitely going to be that structural one I drew there, right? So that level there is definitely what I want to be focusing on. And again, New York Stock Exchange is going to open in the next 3-4 minutes. And what we're going to do in order to monitor this is I'm going to close up the rest of these setups, and I'm literally just going to keep open NASDAQ, dead center, US 30 far right. We've got a similar type of position. NASDAQ is coming down off those highs, and we're a very similar position on US 30. So what I'm interested in this afternoon is, do we break structure? Again, German 30. Oh, no, I've got two USA 30s. German 30 is not here. Let me get German 30 really quickly. Yeah, guys, sleep is important. Let me know, did I delete my German 30? I wouldn't be surprised if I just deleted German 30. Anyway, okay, it is what it is. We have to fly without German 30 this afternoon. So NASDAQ, making those pushes already. Hasn't even, we're about 6.54 seconds through just before the New York Stock Exchange. And we want to have a look here. What do we end up doing here, right? Again, if we break the previous highs, we might chase it for a buy. If we break those lows, we'll chase it for a sell, right? If New York Stock Exchange still wants to rally on this info, then we will utilize that, we'll run with that. But again, we want to obviously make sure we get those breaks, right? The first candle, the first minute is generally a ton of volatility. So we want to see that minute candle break something substantial, and then we will run in. Okay. So we're starting to peak out at the previous high. So we are going to prepare some orders here. But you see we're backing off that high. Okay, so let's just keep monitoring. Definitely enough momentum in this to justify a break to the top. But again, I just don't want to get caught in that break in the top and then we start to retrace. Okay, so we're just holding. I haven't yet placed a trade. Okay. So ideally we want that first candle to close out, right? We want that first 1 minute time frame candle to essentially close out. And we want to then see that push continue after that first candle. If we start to get immediate weakness, we will get out of that. But I think this one might actually end up wanting to try and push to the top side. So I'm going to utilize for this afternoon, I'm going to utilize a 3,000 point trailing. Again, can be really choppy markets this afternoon. We obviously just want to exercise risk. So from next week, I want to be trading in the new system completely, like not even touching MetaTrader at all. Okay, so stop losses are in profit, and we're currently pushing 300-400 pips to the north side there from a buy perspective. So a nice healthy push there, depending where you've entered. There we go. So nice healthy push, 400-500 pips. So what I would suggest, go ahead and close up some profit. I've got my stop losses in profit already. There's my stop loss down there. I've only got one trade that hasn't yet gone into profit, but it's closed up, one of those ones in profit. We want to see where this ends up running now. Tesla share is doing extremely well. I'm just going to switch to that really quickly while this is in the background. Look at that spike on the Tesla open, right? Tesla doing extremely well. This can be on the back of that Elon news, but if you're on those Tesla buys with me that we did over the trade-a-thon, we're currently trading at $232 per Tesla share. We bought these shares at 206. I can definitely see this getting to 236. That's well over 10, 12, 13% ROI just on the Tesla items there. So USA 30 still continuing that nice push. Again, I'm going to utilize, let's say for this last one, I'm going to utilize maybe a 2,000 point just in case. There we go. So trailing stop. Didn't engage. I'm still waiting for market just to push that a little bit higher. Let's see. There we go. Trailing stop engaged. So we are running a little bit in profit, but because it's choppy and I'm using a very small trailing stop, I can be taken out prematurely. I'm only running. Yeah, there we go. So let's see what she ends up doing here. I'll place in another one, but very, very choppy markets this afternoon. I'd like to get a little bit deeper of a push down just so I can get a deeper order in here. But definitely seems this is where markets want to be. Not showing a lot of weakness to the downside, but definitely a ton of volume, right? These super choppy. Yeah, so we're pretty much going to hold that. I'd like to see this thing start to break market direction. But again, smaller stop losses, 200 pips, 300 pips. These swings are quite substantial. So, you know, the swings, even the smallest of swings here, again, my stop loss has moved into profit there. We are moving up, and any sort of pullback would close that trade out in profit. There we go again. So, you know, 3-4 consecutive trades into profit, but unless you're willing to take a bigger stop loss, 500-600 pips, you know, these trades are just gonna end up closing out into profit with very, very small stop losses. So I'll try a bit of a deeper one here. Let's go for 3,000 trailing points. The markets are making that push to break that high that we saw earlier, right? It definitely seems like it's got it in it, but we obviously want to see that high being broken. That high is definitely going to be at the $32,284 on US30. Let's give a quick look on NAS, what NAS is up to. Yes, NAS is reversing, right? So US30 is back into profit, or trailing stop is engaged again. Depending where you guys have entered, if you held that original trade, you should be in about 800, 900 pips in profit. So there it's starting to run, and NASDAQ should start to follow suit. NASDAQ is not here, so this is very interesting. So we always look in most cases to try and see that correlation, and we want to see NASDAQ, US30 all pushing in the same direction, right? So that's close out again in profit. But ultimately, we want to see these guys run together, but NASDAQ is breaking structure towards the downside. That makes me really worried about US30, that US30 isn't yet reacting to the downside. NASDAQ is hitting the floor and pulling back, which is fine, but we just want to quickly monitor this, because if we see US30 start to reverse in any meaningful way, that would obviously get me quite concerned. Okay, so markets are completely out of balance this afternoon, right? We're seeing US30 do its own thing. We're seeing NASDAQ do its own thing. Dollar index is kind of still losing a bit of value here, even though we got the positive GDP data. Let's see. So between NASDAQ and US30, one of them is going to win. So one of them is going to win here. And I suspect it's actually going to be NASDAQ. I think the NASDAQ is going to win, and I think we're going to see a NASDAQ break as a sell. That's my current expectation. US 30's pushed to the top side, right? If the NASDAQ was running with US 30, I'd be pretty happy and convinced to say, all right, that's the future where the market's going to go. I'm telling you, like, I've got a couple screens open here, but because I'm streaming off one screen, I've got to isolate all of my charts into one area, which is super, super difficult. Extremely, extremely difficult. Really check here. Yeah. So when's the last time you guys have seen NASDAQ and US 30 run opposites, right? Because it doesn't happen all too often. It happens once every couple weeks, and that's generally when there's a bit of uncertainty and imbalance in the markets. Euro USD breaking upwards. Okay, so Euro USD is outside of trend. Again, Euro USD might be attempting to, and I can't confirm this, but we might be attempting to retest that diagonal, right, in terms of this larger move there. So because we've broken out, it might be trying to get back into structure, but just retesting that level over there. So let's continue to watch. So Euro USD buy or movement to the top side is a weakening dollar, right? So there we're seeing that weakening dollar. That could be the fuel rally on US 30. But again, when there's a US 30 rally and there's a NASDAQ sell, one of them has to move in line with the other. So if it's a weakening dollar, right, then it means that NASDAQ is, the US 30 is actually doing the correct thing, but we're seeing NASDAQ sell off. And that NASDAQ sell could be due to the fears of what's coming from an Apple and Amazon perspective. So it's giving us a little bit of a highlight as to where the fear in the market sits at the moment. So there's definitely fear around the technology earnings, right? To see that imbalance, to see US 30 rallying and NASDAQ not rallying. So let's see. Generally speaking, we allow for about 12 minutes after New York Stock Exchange open for direction to be confirmed. So that's just a little bit of a side note, right? So if market starts to rally, is that the be all end all? Will it go forever? Yes and no. Yes being that in most cases, the break direction is the general direction. I've taught you guys this in the past, right? So if we see that New York Stock Exchange open with that buy momentum, it's generally where markets end up long term, especially over the next couple of hours. However, if we're going to get a change in direction, it will generally happen within the first 12 to 13 minutes of the open. So by example, 15:43, if we don't get a change in direction, it's more than likely we will see US 30 continue to the top side. Again, it's not written in stone, but if you compare all of those moves, if you compare 50, 60 moves in a row, more often than not, that is the case, that is the rule. So those types of observations help to get you a little bit of confidence when unsure or uncertain about entering any one particular position or particular trade. Okay, I can see this one camera battery is going to say goodbye very, very shortly. Let's have a look at what NAS is up to. Yeah, NAS is falling through the floor. And generally speaking, these two moving in opposite directions, I'm really, really worried. And it could very well be USA 30 that chases. So you know what I'm going to do, right? I'm going to wait another 2 minutes. Well, my camera doesn't just die. Sorry, we're going to just really change the battery here really quickly. Just remember that camera's on. Yeah, top one. Yeah. So what I'm potentially looking at doing is we may look at chasing this particular thing to the downside if we start to see NASDAQ hold out on these levels. I just want to quickly see something on NASDAQ. So on an hour, it's quite strange because we're essentially engulfing the last hour's gains right towards the downside. So that's a pretty intense price action symbol that we could be really continuing to the downside. So on USD, man, so you know, I don't like making an uncertain trade, right? But I obviously can't afford not to. It's too good to resist. So what I'm doing here on USD, sorry guys, I'm just helping with a change of battery here. Our MetaTrader's decided it's taking a little bit of holiday. There we go. Oh, finally executed. So I can't help it. I have to trust my guts on this one, and I'm going to continue with. I do believe we could see that sell momentum. So I'm going to go in. I've got a sell popped in onto Nasdaq. Sorry, USD. Nasdaq is sort of stalling out of this bottom zone in this region. It's on. No. Batteries. I think at batteries. So I think one of our batteries is actually just popped. I don't think it's in existence anymore. It showed fully charged, but it's not working at all. That's fine. Don't worry. Yeah, I really would like to ride this one to the floor. Okay, so it's 12-13 minutes past, right? And we are getting a little bit of weakness from a structural perspective. We are getting that little bit of a rally. This isn't yet a pullback. It's starting to seem like a very small time frame scallop, right? So scallop just meaning we're starting to wind out on this market. It's not yet a pullback because a pullback will be much deeper. We would see a pullback, down to this area here. That'll be a solid pullback. But this seems to want to slow down in momentum towards that market there. So I'm going to essentially just hold this thing because I do foresee we could potentially move into some sort of break towards the downside. I'm going to hold and put in about a 3,000 point trailing. I think that'll do for this afternoon. Let's get in that 3,000 point trailing. Let's do a little bit more. Let's maybe do, I'll do 4,000 points because I don't want to keep getting taken out, move into a trade and moves into profit and then gets taken out. So I'm going to go into with a 4,000 point trailing. Just be aware and pay attention to the fact that on 1 minute time frame, we've got a lot of wicks to the downside. A lot of wicks to the downside just means that, the markets are really struggling to make any substantial move there. And Nasdaq, even though it pushed to the floor, we found some sort of meaningful bounce on that market bottom. And yeah, what's interesting though, we have to pay attention to is on a 15 minutes it looks, or 1 minute it looks nuts, right? This looks like a lot of movement. But what you must also observe is on a 15 minute, right, we essentially, not 15, on an hour, right, we're literally seeing that whole bull move engulfed in the previous candle, right? So that's just worth observing. Obviously just making sure that we're looking at the bigger picture as well as the smaller picture simultaneously. So let's see, my trailing stop is engaged and we are in profit now. We're running about 500 pips in profit. So if you're in that sell, maybe go ahead and take some of that profit, depending if you're in more than one trade. If you have, let's see here. So what we can also do is, yeah, I wouldn't take partial profits, but it's up to you what you want to do here. We're running about 400 pips in profit. It's starting to break that downside momentum. Let's see. Yeah, I'm going to hold that sell. Oh, there we go. Now we're starting to pop. Okay. So because we're starting to pop, I don't want to get taken out prematurely because then it means we could make a much bigger rally. So as this market moves, I will generally adjust my stop loss as long as I'm always covering my entry point, right? So at this moment here, I'm going to drag it back to entry, and I'm going to let the system drag it automatically. And we're dragging now at about 6,000 points. So we're dragging that sell by, 6,000 points, but we're already in about 1,000 pips with a profit. So regardless, sorry, not 1,000 pips, 1,000 points, right? So it's about 100 pips in profit. And I just don't want it to come back up and take me out. The reason being that if we're going to continue to the downside, it could be long term. There we go. So it could be that we were definitely in a bull trap or dead cat bounce. I think the markets are scared of this technology news for this evening. We're starting to see that much bigger sell-off there. Look at that market move there. So about 1,100 pips in profit now. And I'm going to again just a stop loss and make it even bigger, right? So I'm going to now have an 8,000 points trailing, which is 800 pips. Look at that market move there. We might break the floor on this one. We might break the floor completely. So if you are in a US city sell, you should be smiling because this thing is absolutely dominating. Those couple hundred pips, TPs here and there, it is what it is. But again, that's why I say risk reward ratio is everything. So if you're risking, example, if you're risking, 200 pips on a trade, you want to make sure the trades that you're losing 200 pips, and the trades that you're winning, you want to obviously make sure that you're winning, 1,000, 1,500 pips. So you can lose 3-4 trades in a row if necessary, or if that is the case, and still the one trade that you win, you are net positive on your account size. So I can see here, someone's asked a question. Does gold, Uncle B asked, does gold correlate with indices? In most cases, yes. Right? Because remember, gold is mostly driven by the dollar value, and indices are also mostly driven by the dollar value, especially in this current state, right? Everything right now is driven dollar value. So at the moment, dollar value should rise. We got that initial 1 hour pullback, right? But we're starting to see that pullback is starting to build value or momentum, and the dollar could gain a bunch of strength this afternoon, which would further identify our indices sell here. So if you are in a sell with me, if anybody's in a sell with me, right, we are on about 1,300 pips per position. So you got 3 trades there, you're sitting at 4,000 pips for that particular setup. Okay, now should we start breaking supports? That would be insane. NASDAQ through the floor. Okay, so there we go. So there the market's revealed its final direction. So this is super important, and I want you guys just to pay attention to this, is that you don't have to catch the big move, right? You don't have to catch all the small stuff. You just want to make sure that you're in line with the market's next move or where the markets want to go, right? So NASDAQ just absolutely smashed through the floor in the last 2 minutes. NASDAQ fell 800 pips on its own just in those last couple minutes. Again, in line with that positive GDP number, in line. So that's why when we talk about these buys, I wasn't in very little of these cases. We were popping out some buys, but again, my sentiment was towards a sell. And you want to stick true to that as a trader, and you'll start to develop that skill more and more over time to start having that intuition feel of this doesn't feel right, doesn't line up, and you want to go and get as much data as possible to support your position. So yeah, US30 running perfectly. If you guys caught that sell, then massive well done to you, running 1,000, 3,400 pips in profit on that one. Tabani saying MT4 is so annoying, it is always freezing, I have to close, reopen it every 2 minutes, desperately need the new system. Yeah, that's absolutely insane. Tabani, why don't you go ahead and drop me, my Telegram link is down in the description below. You can direct message me on Telegram. It's the first link that says inbox me in the description. You can go ahead and give me your MT4 number. I can send that through to the team just to double check there's no bugs or anything that's running a miss or mock on that side. But yes, the new system is absolutely power. I'll be playing around with it. I am going to be playing around with it a lot more over the next coming hours and over the coming days. And I do want to be essentially trading off of this from next week, right? So if again, you want to be part of that insiders program, if you've been with us in the live broadcasts, then yeah, then we're going to have some fun. Kirshen's saying, I've been on a sell on NAS at US30. Kirshen, we are milking it. We are pumping money, pure money. We're milking money out of the markets this afternoon. Look at those moves, guys. We just made another massive move down on US30. We're currently running around the region of, wow, nice fat move there. 1,800 pips, almost 2,000 pips towards the downside on US30. Look at that move right there. Boom. massive, massive move towards the downside. So if anybody's in that US30 sell side, then guys, send me a screenshot. Tag me on Instagram, tag GlobeX360 on Instagram. If you want to be part of the Insiders program and you want to get your hands on the new system before anybody else, and you want to come ahead and test with us, we're going to have a special training session. It'll be a Zoom conference call where I'm going to take you through the features, and each person's going to get to try and test and break some part of it, right? We'd love your feedback. There's still a lot of development that is coming in, a lot of opportunities to essentially push. But yes, Tiboho, we are currently finishing up the web version. Super fast, super responsive. We then will have a desktop version and a mobile app available in the Android and iOS store. So both Android and Apple available very, very soon. We want to fix any sort of bugs that we find. This is one of the first user live models that we're busy testing. So we have about a week or two to iron out some of the bugs, and then we're going to obviously go mad. So Monet's saying got 20% return on your account. Massive, massive, well done. I will make my screen a bit bigger, but it is going to look a little bit mad with the markets running in the background. That's actually not too bad. We could use that, right? Even if the camera dies, we could use that. Not ideal looking, but it's usable, I suppose, at the end of the day. So Monet's welcome and congratulations. Joseph, Lana's saying, after 19 hours of electricity, I'm back. Missed all the fun since last night, but I caught a sell now. Well done, Lana. Absolute machine. Super proud of you. So guys, listen, outside of that, right, I'm super tired. So this is the point where I say I'm going to love you and I'm going to leave you because I would like to catch a little bit of rest before we start and move into this evening's trade-a-thon, right? This evening's trade-a-thon is obviously going to be quite big. Apple and Amazon is going to be massive. I'm halfway through my write-up of those two companies. So I'm going to give you a summary of that company, what's involved in it, what could we expect, what are analysts expecting, and where could we potentially benefit from the markets. But what I would encourage you to do is, if you are in sells, listen to what I'm saying, try and hold those sells until market close this evening. I'll tell you why, because that's where I want to be, right? I want to be holding a sell, and if these reports come in amiss, right, we're going to capitalize on a massive, massive spike towards the downside, because it will trend, it will be headline, it'll be newsworthy, and markets will be shocked, and we will potentially benefit from those sells in a big way. Right, so there is pretty much the last camera to go, and that camera has said shalom. And as always, guys, remember to live and trade the GlobeX360 way. I will see you guys tonight. But if you have a live account, check your emails, and I'll see you guys a little bit later. So until then, remember to live and trade the GlobeX360 way. I'll see you guys later. Bye.